Okay. So yeah, $2,000 for the titling, $2,000 for the escrow account, and then whatever your down payment is, those are the upfront costs for the buyer.
There's actually two more that I'll tell you about. So the appraisal was at that $2,000, but technically that's an upfront cost to you.
Okay.
You pay that once you get an accepted offer, because now the bank wants to find out what's the house worth.
Right.
Is it worth what you're willing to pay for it? So that's when it's like $450. So we would pay for you would pay for an appraisal. That's $450 up front. The other cost is your homeowner's insurance, because we don't escrow for it because people would change all the time. So a year paid homeowner insurance up front.
That's what you'd pay at the closing as well?
Before.
So
when you reach out to your insurance agent and you say, hey, I'm buying a house in 2 weeks. And they're going to say, congrats, what's the closing date? What's the property address? How much are you paying for it? And they're going to say, how many bedrooms, how many baths, all those factors that go into homeowner insurance. And then you're ultimately going to pay first years of homeowner insurance, and they're going to give you a paid receipt. So they're going to send us the binder, which is proof of homeowner insurance, and the paid receipt. So that's an upfront cost to you. It won't be part of my closing, but it's still a cost to you.
Okay.
So that can be paid on a credit card.
Gotcha.
Same with the appraisal. So the appraisal is $450, put it on a credit card, get the points.
Okay.
Same with the homeowner insurance. Now, let's say after 1 year, if you would prefer to have that homeowner's insurance monthly, instead of getting a bill for another $1,500 in a year, you can switch it at that time to be monthly or quarterly, or keep it on the annual pay schedule with whatever your insurance company offers.
Gotcha. Would anything change if it was a private sale where you knew the person, they're like, hey, we'll give you a deal, $200K, would you still have to get an appraisal and everything like that?
So the system will tell us.
Okay.
It's an automated system that's very smart, and it looks at the property address. It can instantly pull in previous sales, comps, values, like everything, and it will tell us if we need an appraisal or not.
Okay.
You could have the opportunity to get what's called an appraisal waiver, where the system says that we're fine with that. You don't have to pay for one, or a limited cost. But most times it will be a full appraisal. Now let's say you're buying the house from your friend, you're getting a good deal. And on your offer to purchase, you say you don't have the appraisal contingency checked. So what an appraisal contingency is I'm willing to pay X for this house based on the appraisal coming back.
If it checks out, or the value of it?
If the appraisal value checks out.
The value, okay.
Correct. So you could not have that box checked, but the bank is still going to require an appraisal. Just because the borrower's fine with not getting one, the bank still has to be confident that the house is worth what you're willing to pay. Okay. So no matter what, if that box is checked or not, we're still going to require an appraisal. But if that box is not checked, that means you can't negotiate. So if you have an appraisal contingency, that means you can negotiate based on the appraisal.
Gotcha.
If it's not checked, can't negotiate.
Okay.
So let's play that out a little bit. So let's say you're willing to pay $250 for a house. We order the appraisal and it's worth $300. Great. You don't have to pay more for the house now. That just means you're getting a good deal. Yeah. And once you close, you've got $50,000 in equity because the appraiser just said this house is worth $300. Flip side of the coin, let's say you get the appraisal, you're paying $250. Appraisal comes back $240. $10,000 difference than what you were willing to pay at $250. If it's the box is checked on the offer, now you can go back to the sellers and say, hey, we had the appraisal contingency checked. Can we renegotiate? Otherwise, that's your out. If they don't want to negotiate, you can say, okay, well, not worth it. Yeah, I'm going to walk away. But let's say it comes in low at $240 and you did not have the appraisal contingency box checked, so you can't negotiate on it. You as a buyer, you got to come up with the difference. So you have an additional $10,000 to come up with. Really? Yes, because the bank... Oh, right, yeah, because you're already committed to it. Correct, and the bank is not going to make up the difference. Right. So you've got to have the... Now, that's not very common, but you see that a little bit when it's a competitive market and buyers are willing to ultimately do whatever. They're going to waive the contingencies. You hear that a lot. They're going to waive the appraisal contingency. They're going to waive a financing contingency, which if they're financing it, you should never do that. Or waive an inspection contingency. Okay. So if you waive an inspection contingency, that means you can't negotiate based on the inspection. Right. If it's checked, you can get, if you pay for an inspector and he's like, dude, this foundation's going to crumble, you can run if you have the box checked. Right. If you don't, because you're like, nope, want this house, you can still have an inspection, sometimes they won't let you because you didn't say you were going to negotiate on it. It wasn't checked. But you can not check the box saying you can't negotiate on it, but I still want to get one just so I know what I'm getting into.
Right.
So you as a buyer, that's your opportunity to still pay for one. Now, sometimes the sellers might say, well, it's not a part of our contract, so I'm not going to let you in the house until closing.
Mm-hmm.
But it's an option.
Gotcha. And so the bank always has to get an appraisal?
Correct. We want to make sure that the investment's worthwhile.
Right. And do you show that person even if they didn't have it checked, or do they not get to see it if they didn't check the box?
So as a seller, you don't get to see our appraisal.
Okay.
You didn't pay for it. You didn't order it. It's not for you.
It's the same with buyer?
Buyer always gets to see it.
Oh, buyer always gets to see it.
That's their right. Yep, that's their right. So buyer pays for it. We order it. You don't get to call your friend that's an appraiser. We order it. Mm-hmm. A third-party service takes care of it for us that's not interested in getting the deal done. Because if you call your friend, you're going to say, hey, have it come in high.
Yeah.
This appraiser. Or me as a lender would say, hey, I can't have this deal fall apart. Make it come in strong.
Mm-hmm.
You know, that's not how
yeah.
I would, I have an incentive to get the house closed.
Mm-hmm.
So we order it through a third-party service. It goes round robin. If you're the next appraiser in line in that area that you service, you're the appraiser for it.
Okay.
But once we get the appraisal back, we as the bank, obviously we get it because we want to make certain that it's a good investment, but we always send it to the clients. So that way they know what they're getting into.
Gotcha.
That's now an appraisal's separate from an inspection.
Okay.
A home inspector, he's going to go out there, climb on the roof, check the gutters, open and close the windows. He's going to go in the basement and pop off the cover on your furnace. Mm-hmm. He's going to go through that house with a fine-tooth comb, and his job is to find everything that's right with it and everything that's wrong with it.
Okay.
So I think home inspectors are normally in a house for 3 hours.
Oh, wow.
So they're checking every door, every lock, every sink, hot water, cold water. Mm-hmm. Like they are going through that house with a fine-tooth comb. So that way, once you pay for an appraisal or an inspection, you know exactly what you're getting. Mm-hmm. And he's going to say, hey, the roof is fine. There's no leaks, but it's going to need to be replaced in 3 years.
Right.
Or I noticed this was incorrect on the water heater. So the appraiser or the inspector is going to go through that house with a fine-tooth comb and find everything that's right and everything's wrong.
Gotcha.
The appraiser, that's not his job to open and close every window. He's looking at the structure itself. So he's going to say, okay, it's an 1,800 square foot house. It's a ranch, 3 bedrooms, 2 bathrooms, an attached 2-car garage. He's looking at all those line items. Mm-hmm. Because ultimately what he's going to do is he's going to say, okay, this is what this house looks like, the level of finishes, the location, the size of the yard, the square footage of the house, beds, baths. And then he's going to go look for comps, a comparable. He's going to look for other homes in that similar city, neighborhood, street that have recently sold. Mm-hmm. And he's going to go off of those comps, whether they're a nicer property or a lesser property, just to get a good idea of what the value of that house is.
Right.
Because the market will tell you what the house is worth. If the house sold for $280, it's worth $280 because someone was willing to pay $280 for it.
Right.
So he's going to pull comps in the area to figure out, if you had to list this house today, here's what it's worth.
Right. And would that appraisal go in before you make an offer, or is it after the offer?
After. So after an offer, because there's a cost associated with that. So you wait until you've got an accepted offer.
Okay.
Typically, once you've got an accepted offer, because most buyers are not going to be home inspectors. They're not going to, unless they're a general contractor, they're really not going to know exactly what to look for. Like, at face value, it looks like a great house, but let's have someone that's licensed go in there and confirm. Mm-hmm. So once you get an accepted offer, that's where you can order the home inspection, and we'll order the appraisal, and we'll order the title work, all of those check marks after you've got an accepted offer.
Gotcha. So the bank cares about the home inspection as well?
No.
Oh, you guys don't care about that? Just
Correct.
The buyer?
Correct. Only the buyer. We care about the appraisal. Now, let's play that out. So let's say the appraisal comes back and he calls out that there's water in the basement, and he'll take a picture or two. If there's water in the basement, that's our opportunity as the financer to say, hey, you need to have a licensed basement specialist go in the basement and figure out what's wrong with this.
Okay.
Because ultimately it's our debt that we're buying it with, so we want to make sure that it's not going to collapse or that it's safe to live in.
Yeah, right.
Essentially, they're looking for the structural integrity of it.
Okay.
Safety and soundness of the property. So if anything that affects the structure, like for instance, if you've got a second floor balcony and there's no railing.
Mm-hmm.
That's a safety issue.
Okay.
So they would say, hey, you got to put a railing on that before we can close and take ownership of that.
Would that be only if they check that box for the being able to negotiate with the home inspection?
Well, that would boil down to the financing contingency because the bank won't do the loan unless we're happy with it.
Okay.
And ultimately, we would want to be happy with it so we can sell it.
Okay.
Because we know that if someone else does a drive-by and they see a second floor, third floor balcony with no railings, it's like, that's a potential lawsuit. Put a railing.
Yeah, right.
But yeah.
But there's little things like, say, like the hot water heater's not working or like is getting old or something. If you had that box checked as a buyer, you could say like, hey, well, you need that replaced. Or that would be like where the negotiation would come into play.
That's when you can negotiate. Yep. So they might say, you know what? I don't even live in that house anymore. I'll take off $1,500.
Okay.
Or they'll say, okay, yeah, we'll get it fixed.
Gotcha. So if you didn't check that box, that would be if like you're trying to move quick and you don't even care, you just want to get into it right
Correct.
away.
Right.
Gotcha. Okay.
So yeah, there's a whole bunch of strategy involved with how do we make our offer more attractive to the sellers, but how do we not put ourselves in a pickle?
Yeah.
If we don't have these boxes checked, are we okay with probably the repercussions that come with it? Like if we don't have an inspection contingency and we think we saw everything, and after we own it, the first rain, we get water in the basement.
Mm-hmm.
It's like, okay, well, we didn't have an inspection, and he probably would have been able to tell us that there's signs of residue, and he has a moisture meter, and he can hold it to the cinder blocks and say, hey, this is wet. Mm-hmm. You might have some damp issues. It could be rectified by putting a dehumidifier, or you might have to change the grading in the outside to have water run away from the house, or that side of the roof is missing gutters. Mm-hmm. Something simple as gutters could solve the problem, or there could be bigger issues with the foundation. So, but yeah, I mean, it's all about how do we have an attractive offer to win in this market, but also how do we protect our buyers? Gotcha. And that's more of a realtor's job, not mine. Mm-hmm. But just seeing enough of these across my desk, I've kind of learned what wins and what won't win, and like just another education piece. Now, I don't want to, like, that's ultimately the realtor's job, is to talk about like inspections and appraisals. Mm-hmm. But it's my job to also just educate them on how it works from my side of the desk.
Okay.
But they're going to say, hey, you know, this house is pretty clean. I didn't notice any moisture in the basement. Now, if the realtor's been doing this a while, they typically know what to look for.
Okay.
I saw gutters. I saw, you know, the foundation was dry. There was no moisture. There wasn't an active leak in the sink. You know, the flooring wasn't buckled or uneven pitching to one corner. You can typically get a good idea, but it's always nice to pay for an inspection.
Right.
So
for sure.